So if you're a buyer out there, you never know what the seller situation is, right? So I would just encourage you to just put offers out there.
Yeah.
I think that's probably the best way to get a deal. But the thing is, if you don't put the offer in, you're not going to get a deal anyway, because you're going to get guaranteed to have zero. Nothing.
Oh yeah, for sure.
Right.
What was that quote? You miss 100% of the shots you don't take.
That's it.
Look, I get it. The Toronto real estate market is confusing. Whether you're a new or experienced investor or just looking for a home to raise your family in, join us at Broadview Table Talks as we sit around the table with my friends and talk about the real estate and the ever-changing market in Toronto.
Hey guys, welcome to another edition of Broadview Table Talks, episode number 7. Today with Michael Ng, our top agent, one of our top agents, you and Botter. Yeah, but anyway, we're talking about buying in today's market. And as you know, it's been a crazy market. I shouldn't say crazy, but it's been a
wild
market. It's a different market, okay? Yeah. Because interest rate hikes and all that.
Yeah.
And now it's actually a good time to buy, I think, depending on what you're buying.
You know, it's been a lot of fun. We've actually picked a lot of buyer clients up recently, and it's become a point where it's no longer just throwing whatever you can at the seller. There's more negotiating. There's more thinking about what strategy you should follow, what kind of homes suit your clients, and having that ability to choose exactly what kind of home you want to put them in. Yeah.
Certainly more of a buyer's market. Now, traditionally, in a hot market like today, in the past few years, we've seen 1 or 2 months of inventory. Now we're up to 3-ish, almost up to 4. I think 3.7, something like that.
Yeah.
For the total Toronto real estate market in general. The sales to new listings ratio, which measures the temperature of the market between the amount of new listings that come up versus the amount of sales that happened, we're at like 30%, something like that, which is like buyer's market territory. So the new listings coming in the market, there's more new listings than there are sales, or less sales than there are new listings, whatever you call it.
Yeah.
And the months of inventory, active inventory, whatever's left over on the market versus the amount of sales has been increasing because there's more active inventory.
For sure. And we're seeing stats from around the GTA where there are certain markets and definitely certain pockets where pricing has cooled down. And this is great news because it's an opportunity. And one of the things that we are often asked is, when has the market hit the bottom?
And that is a tough question because nobody knows.
Yeah,
right?
I mean, we don't have a crystal ball. We can't predict exactly when the bottom is. It's difficult to know exactly when things are going to climb back up, especially because in September we're expecting another interest rate hike.
September 7th, another Bank of Canada rate hike.
Yeah,
which doesn't translate exactly to the fixed mortgage rates too, right? Because that depends on the 5-year bond yield, which surprisingly enough, funny enough, I think they raised it too high. Now it's coming down like half a point.
Yep.
So that means your 5-year fixed is not going up with the variable rates, right?
Yeah.
Variable rates are going up.
Yeah.
But ultimately 5-year fixed are coming down. Well, it's coming. It's teetering between up and down.
And if buyers and sellers aren't thinking about what is happening behind the interest rate hikes, they just read the headlines, they get a little bit scared.
Of course, it's there's a lot of fear out there, and that's what they do. They try to sensationalize the media so that you can read the articles, right? Like that's the whole point of it. But no, there is a lot of crap going on in the world, and if you don't know what you're looking for, then it can get pretty scary, right? And a lot of buyers sit on the sidelines waiting. They've waited all this time, and here's your chance, but they're not doing it because they're waiting for the bottom to go even more.
Yeah.
Right? Which is kind of crazy in my opinion, because it's hard to time the market. Like you shouldn't be timing the market if you have
it's impossible.
5-10 year time horizon, 3-year time horizon even, for that matter. I think in 3 years it should pick up higher than where it is today. I would think that.
Yeah. Like a normal business economic cycle.
Right.
Yeah.
Right. I mean, because if you think about it, like real estate is not like a company that just go bankrupt, right? Like not that companies do, but I mean, real estate is still going to be there. There's still going to be a property that somebody has to live in, and somebody will either rent from you or choose to, you can live in yourself or have a family member or whatever it is, right?
Yeah. And sometimes when people look at the news, they often just divide sales with rentals, and they don't account for the fact that these are people who actually need to live inside homes, regardless of whether they're paying rent or whether they're paying mortgage. And what that means is that we've seen a lot of people shift from the market of buying and selling to renting out properties. I mean, things are going off the shelves, sight unseen, over asking, and people are jumping into properties. So these are potential buyers further down the road, and it means that they're out the market now, but it doesn't change the fact that there is solid demand for housing, especially within the core.
Yeah, that's exactly it. We talked about this about a few podcast episodes ago when you're out having your baby with Kayvon, and he's our leasing agent. It was pretty awesome. Like just seeing him at the ground level talk about how it is working with tenants, because it's been tough, right? As you may or may not know, if you're a tenant out there, it's hard to get a place right now.
Yeah.
It's prime rental season,
Yeah.
and things are kind of snapping off the shelves just like that really quickly.
Yeah.
We're getting, as a listing side, we're seeing multiple offers in every single one of our listings. Like every time you list something, you just get tens of
more calls than there
a
are
week.
showings. Like sometimes more calls than there are showings. It's
Oh, that's
nuts.
the worst thing I hate. I hate when agents call and say like, just so I don't waste my time. Like, well, what about my time? You just waste my time making that call. Like, if it's on the market, it's there. You know what I mean?
Jump
Book a
on
showing, and I'll cancel it if it's not.
Yeah.
Anyway, whatever. But I guess not every agent's like on the ball like that, right? But ultimately, the rental market is super strong right now.
Yeah.
Because people are on pause for buying, which I think is a dumb move.
Yeah.
Because if you're buying something, you're amortizing the mortgage. You're paying it off if you get qualified for it, right? If you're renting something, you're just throwing that money away. And it's roughly comparable in terms of the payments. Like you might pay a little bit more for carrying costs for actually holding, and you have your capital down. Actually, that's probably a big reason why people don't buy, because they don't have the capital to buy.
Yeah, the capital's
in the
hard.
first place, like the 5, 10, 20% down, right? Or 25%, 30% down. So that is a challenge. But if you're in a position to be able to buy something, I'd say do it.
Yeah.
No matter what. Like in the long run, it won't matter.
I mean, with the way rent is right now for a 1-bedroom apartment's around $2,800 in certain buildings in Toronto.
That's crazy.
You might, if you have the down payment, you might as well just jump in.
Right. So that brings us to the point of the investor market, right? If you're buying a property as an investment, which a lot of people don't like the financialization, I can't say that word, of real estate, right? Making money off of tenants. I totally get it. But like, you have to have some incentive for people to put capital in, to put that down payment in, to originally buy the place, right? So they're going to expect some sort of reasonable return.
Mm-hmm.
If anything, it's a hedge against inflation. That's like the main thing. But ultimately, you're going to, like, the investor market is pretty ripe right now.
Yep.
Right? If you're a buyer, if you're an investor and you're sitting on cash, and whether you don't need a mortgage or you need a small mortgage or whatever, do a short 1-year mortgage even, 1-year fixed mortgage, or a variable rate. Just stay on variable and just refinance it out after the rates come back down, right? Or potentially could come back down.
Yeah.
So I think it's a great opportunity for investors to buy and jump in.
It is.
Right? If you have the opportunity, because like the rental market's going through the roof.
Yeah.
The cost of new construction is through the roof. Like it's not going to get any cheaper between the development levies, constructions, materials, and labor, even profit or whatever, even the land itself.
Yeah.
Like all that's going up.
Land is going up.
So the cheapest you can buy any project out there for right now in Toronto, in the city of Toronto, is $1,600 a foot.
Yep.
Right. If you go to the outskirts, maybe you're looking at $1,200. And you go even further out, maybe $1,000 a foot, $900 a foot.
Yeah.
In an area where it typically is not that high, and the rental rates don't support that.
Yeah.
So if you're looking for an individual condo, I think now is the time to buy resale, because there's sellers out there that need to sell.
Yeah, absolutely.
Not to say there's panic sellers out there, but let's get that in a second. So if you're an investor, multifamily is doing great as well too. However, the cost of financing is pretty expensive.
Yes, it is.
Right, commercial loans are pretty expensive.
Yeah.
But yeah, back to the panic sellers. Are you seeing any right now?
I wouldn't say they're panicked. I would say they are eager.
Right.
I mean, they have their own reasons for moving, whether it's downgrading, whether it's, trying to increase the number of sizes of rooms that they have. They all have their own individual reasons. And in this market, they absolutely need to pull out that equity and put it into the next place.
Right. So, I've been advising some clients to really sell low and buy low, right?
Mm-hmm.
And if you have a new family member, or you need more space, you're downsizing, whatever it is, downsizing maybe not the right time to do it, but like if you're upsizing, I think is the best time to do it today.
Yeah.
Right? Sell low, buy low.
Yeah. I mean, this
and
motivation.
life doesn't stop, right? Like you have a kid, I have a kid, right? Just a new kid.
Exactly. Life doesn't stop. It doesn't make sense to time the market, because there are always reasons to do it now or not do it until later on. And it doesn't make sense to play the waiting game, especially if you have something urgent that you need to address.
Right. So that being said, representing some listings, I haven't seen that many panic sellers, right? People only sell because they either bought something or they need to, or like, the 5 Ds of real estate, right? Like death, divorce, that kind of stuff, right?
Yeah.
But I haven't seen it. So that's why prices still remain high, even though the volume of sales have dropped significantly. It doesn't mean the average price has dropped.
Yeah.
Right? We're talking about a 42% drop in sales, but the price it's gone up actually year over year.
Yeah,
which is crazy.
For what was it, townhouses and semi-detached properties?
I I haven't looked at the I don't have it in front of me, but I know that the detached housing, the overall GTA market has gone up by 1.2% or something last year over year.
Yeah.
Condos, detached has come down like 7%, something like that. And then condos have gone up by whatever it is carrying the load, right?
Yeah.
8% or I forgot what it is. I got to look at the TREB stats again. But ultimately, if the volume of sales have dropped by 40% and prices are still going up.
Oh, yeah.
Like that to me signifies like overall in general, like an aggregate. I don't think there's panic sellers out there. I think they're able to hold on.
Yeah.
Right. It all comes down to the economy and what happens with these interest rate hikes and whether or not we're in a recession where people start losing their jobs. And right now, unemployment figures are actually pretty good. I mean, they haven't, like, everybody's employed, right?
Right.
And it's not to say that's going to be the case for long term, but I think as long as everyone has a job and they're able to pay for the mortgages, because people that have good jobs would have a mortgage typically, right? Or sorry, I should say the other way around. People that have mortgages should have good jobs in order to qualify for that mortgage.
Exactly, yeah.
So typically, if they're able to get funding and they still have like income coming in, they can pay the mortgage, and they probably have some reserves as well too to be able to, pay those reserves or pay that mortgage. So they may not need to sell.
No, they don't.
Right? Which means, of course, the average property days on market has gone up.
Yeah.
We'll see what happens.
Well, that's why it's a negotiating game and not, make your best offer game.
Right. So if you're a buyer out there, you never know what the seller situation is, right? So I would just encourage you to just put offers out there.
Yeah.
I think that's probably the best way to get a deal. But the thing is, if you don't put the offer in, you're not going to get a deal anyway because you're going to get guaranteed up zero. Nothing.
Oh, yeah, for sure.
Right?
What was that quote? You miss 100% of the shots you don't take?
That's it. So if you're a buyer out there in today's market, I think it's a wonderful time. You have a slower market. There's certainly not as much inventory as there to pick from as in the spring market, but you're not competing with as many buyers, a lot less buyers. And
there are chances for sellers too. I mean, it's still a good time to sell because there are buyers out there, but you have to negotiate a little bit.
Okay. Well, with that being said, if you're looking to make a move, you know where to call. And or if you have any questions about the market, because I actually have some consultations a little later today about first-time investors. Now they're sitting on some capital because they're prudent with their spending. With their saving, and now they have some money, and now they think maybe now's the time to jump into the market.
For sure.
So what would I advise them? I would say, well, look, the market goes up and down. Right now we're a bit of a down. It's a bit of a buyer's market. Yeah. It could potentially go down further, but it could also potentially go up. It just depends on their time horizon, depends on how long they're going to hold the property for, what the purpose of having this property is for. So in this particular instance, they're buying for their kids.
Oh, at least they'll be able to find tenants for it easily.
Well, they're young kids, right? So, but you're saying like in the rental market? Yeah, for sure, for sure.
They'll cancel it out.
Yeah, absolutely. So I think there's a lot of renters out there ready and willing to buy a property. Like I have a lot of people asking for 1 bedroom, and I think if you have to choose between 1 or 2 bedrooms, I'm telling people to pick 2 bedrooms because it kind of gives you more options out there. Oh, right? Whether you rent to a couple or a maybe one person wants it with a really good job or whatever, or roommates. Yeah. Because at the end of the day, a single bedroom, 1 bedroom condo is getting really expensive for rent. Like you're talking about $2,400 on average, over $2,400, and that's jumping up really quickly. Yeah,
the pre-con that we saw for 1 bedrooms was pretty high, especially for some of the downtown projects.
To buy or to rent, you mean?
To buy.
Yeah, exactly. So that's going to be the cost base. So like, investors are going to take a bit of a, loss because they have the principal payments being paid. So they have some negative cash flow, but they're going to have a certain minimum bar, right? And that's your new inventory that's out there. Yeah. At the end of the day, we have so much immigration going on. We have so many wonderful things about being in Toronto. And there's a reason why people come to Toronto, companies come to Toronto. They don't start a company up in, some small town in Canada because you can't get the resources. You can't get the employees. Yeah. So you got to be where the employees are, and also you got to be where other companies that you depend on and you have working relationships are, and generally it's in big cities. Yeah, where the infrastructure is. That's right, right. Yeah. Where you have like quick flights out and things like that, for flights in, I guess you should say, for meetings or whatever. Yeah. So I think Toronto is still going to be strong as a huge employment center, which means it attracts all the jobs. All the people living here. Mm-hmm. And it's just a big ball. It just keeps on rolling. Yeah, we just have to find a way to manage the ball. Yeah. Or get financing for it anyway, if anything. So, all right. With that, if you have any questions, just give it a shout. We have a new email. It's podcast@broadviewavenue.ca. That's podcast@broadviewavenue.ca. And give us a shout. We'll talk soon. Add it up.